Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing one of the techniques that I use each week with my end of day trading. I use a few various triggers for trade setups. One of the things we're going to review today, which I think will be very powerful for traders to look at, is a violation of a previous week's high or low. Now, that's a little bit different than just pure support and resistance off peaks and troughs. It is similar to some degree, but this comes back to a bit of market profile, but we're just going to keep it simple. We're going to be looking at purely a violation of a previous week's high or low for a trigger. So just looking at the euro, starting off with, we'll review all the 10, 11 pairs that I look at specifically, and then I'm not going to go into the other pound or euro or yen crosses, but we'll just look at the ones I've got up on this chart. I tend to go through these manually. It takes me a second to check this chart, and virtually the first thing I do is, again, this is not the only thing I use, but this is one of the things that I use, and that's a previous week's high or low. So just the dark dotted line is the first day of the trading month, and the lighter gray lines is the Monday bar. So again, Monday, Tuesday, Wednesday, Thursday, Friday, and then again the dotted line signifies Monday. So with the euro, with this particular trigger, I did not get any trades triggered. That was last week's high, and that is this week's low. So straight off the bat, we did not get any triggers for that particular trade setup. Now, obviously, there's other opportunities that intraday traders may have looked at with that, but specifically just with this previous week's high and low setup, we did not get a trigger. So we go to the USD Swiss, and again, we just right away put our previous week's highs and lows. In this particular case, what I would tend to do is, instead of going to the low, I would use the last bear bar. Because the market was bullish, I would use the last bar that the market broke out from as our potential support level. Now, just again, sticking with previous highs and lows, we did not get a trigger on the Swiss franc. This did not go high enough to take out the previous week's high. So again, on the Swiss and the euro, we did not get a trigger for that particular setup. When we went to the British pound, however, if we go to the previous week's high and low, we do get a violation of that on the Tuesday. So again, we put our previous week's high and low on the market. The Monday opened up. Momentum traders may have looked to trade the breakout of Monday, but again, for this particular trigger, we did not get a signal until the Wednesday morning. These bars close at 5 a.m. Perth time, 5 p.m. New York time. Now, we have just on last night gone to daylight savings time in New York, so they will be an hour behind us now. So it'll be 6 a.m. Perth and 6 p.m. in New York when the markets close, which is 5 p.m. Sorry. But anyways, on the Tuesday we had a violation of that. But this is where traders, some traders may look to enter the market early or try to short that market. That's not the type of trading setup this particular strategy calls for. What we do look for is we wait for the Wednesday bar to trade. Now we have a bear bar where we can potentially predefine our risk. And so what we do is we wait for confirmation or an indication we want to be able to trade short with a bear bar. And in this particular case, on the Thursday morning, what this opportunity allowed us to do was to take a position as a limit order at the low of that bear bar with a stop above the bear bar. And again, what we're now looking at is an opportunity where we can, number one, predefine our risk, and number two, we have an asymmetrical risk reward opportunity at a minimum to trade to the opposite side of the range. Now, straight away, this market moved very strongly. This trade experienced approximately 50, 60 pips of heat. But again, this is just an example of placing a limit order at the chart, walking away, and then checking it the next day. So you can predefine your risk. You can base your capital exposure on that number of pips that you're going to risk on that particular trade. if you were going to be trading that intraday on the hourly chart, you may have looked for a more aggressive entry somewhere up, higher up into that market. But again, for the simplicity of this strategy where we're just looking purely at the violation of our previous week's high or low, this was an excellent trade opportunity that met our criteria. We had a range established. The market traded through to that range and then gave a reversal indication and then allowed us to take a limit order position where there was ideally to a target an asymmetrical risk reward of approximately 3 times the risk. So if we go to the Aussie dollar, again, just putting out our previous week's highs and lows, and in this case, because it was such a huge move down, we would just purely take the previous few weeks ago low as an opportunity to give us a potential resistance or turning point. Now, there was no trades on that particular signal for the Aussie dollar. We go to the Japanese yen. We again just predefine our previous week's highs and lows. We mark them off. And we had Monday print. We had an out of balance candle take out the previous week's lows. We'll talk about out of balance candles in another video. Another one of the market profile Dalton's important days is a high probability of a large ranging day. The market is out of balance and it's seeking value, but again, in this particular strategy, we did not have an indication until the Wednesday morning when that particular market reversed strongly. Now, if you study opening ranges, what we want to be concerned about is that if this was our opening range on Monday, this day on Tuesday has completely reversed almost the full range. Now, it's well above the 50% level. Again, we'll talk about that in a different video, but this was an excellent opportunity for traders to position themselves with a predefined risk, and they had an asymmetrical risk reward opportunity of, in this particular situation, of at least almost 2 to 1. But what's important about this is that we see the market break out, pulls back on the Thursday. Now this has not hit its target. When that occurs, one of the exit strategies that we look to put in place is to exit either at the high of the candle that we entered in on, and again, if that was not hit, if the high was taken out, we would immediately place our stop to break even. If the high of this Thursday had been hit but not the Friday, we would exit the trade if it had not closed into profit. So again, we'll talk about that a little bit later, when to move our stops, when to go to break even. But in this particular strategy, after one full day afterwards of being in the trade, then we would move our target to the high of the day that we entered in on, especially as we close out in terms of time basis towards the end of the week. So again, we go to the Canadian dollar. We put our high and our previous breakout, actually it would be the previous week, so instead of the low we would use the previous week's high as our breakout level. Now the high did not get violated, so there was no trigger for this particular type of setup on the Canadian dollar, but if we look closely we see an inside bar on the Wednesday, and that was actually the first day of the month. We'll talk about opening range and initial balance in some other videos, but no trigger for that particular trade setup on the Canadian dollar, although there was an inside bar trade opportunity. We go to the New Zealand dollar, and again we predefine our risk at the last breakout candle from the previous week, not necessarily the high or the low, but because we had a bull candle then a breakout again, we use that as our level. But no particular trade triggers on the New Zealand dollar for the previous week's high or low of the range. One of the reasons that we look at this is that it keeps us out of being caught into choppy markets. Now there are other trade setups where we could look for the close above the lowest close or one of the lowest closes in the last 20 bars. And this particularly because there was a large range on the Wednesday, momentum traders on the shorter time frames would have looked to maybe traded that back up to the previous to the Wednesday's high, but no trigger for the previous week's high or low. We go to the Mexican peso, again previous week's high and low, and we put those across. Monday, Tuesday inside bar, Short traders on shorter time frames or inside bar traders may have taken that trade. Again, even if you did, you're able to predefine your risk, and that's critical. And you also can look for at least 2-to-1 in this particular trade setup, but that high and low setup has not been triggered until the Thursday. Now, the only trade opportunity that traders may have been able to take end of day for this particular strategy is a breakout of the high of the Thursday candle. And if they had taken that trade, they can predefine their risk. They've got at least a 2-to-1 risk reward opportunity in a strongly moving bullish market. But that is up to traders to decide if they want to take that risk. Now, short-term time traders would definitely look to enter in on this particular trade on Friday, either on the hourly or the shorter time frames. The peso tends to move quite strongly on the U.S. session, but again, it obviously reversed heavily off that previous support. But end-of-day traders, if they were in this trade, would still be in this trade, and had they been at negative equity at the close of Friday, they would probably look to exit that trade prior to the close. We don't like to take losing trades into the weekend, but because this was in profit, traders will look to see where that market opens up tomorrow, and if it's still healthily above Thursday's high, they'll probably stay in that trade. The euro yen. So on Monday we had a violation of the previous week's low as well as the month's low, I believe. The low of the month, which again, if you're looking at ATRs of the month, this is important. But on Monday we took out the low of the previous week. We had a pin bar. Traders, whether or not they traded that with a limit order on Monday, Tuesday, they definitely had an opportunity to go long this market after the confirmation on Tuesday. And again, regardless of what you think about this market, whether you think it's going to continue down or not, one of the great things about this is that there's a gap that needs to be filled, but at the same time you can still put your low from the previous Monday's opening range there, and you can predefine your risk. So traders are looking, roughly at a 2-to-1 entry if they enter in at market, and again they can still use Monday's low as their stop, or go in at the close of Tuesday, the open of Wednesday, but they can still predefine their risk, and they're looking at a minimum of a 2-to-1, and possibly depending on what happens, they may have an opportunity to trade that back up to the top of the range. Again, we're focusing on number one, being able to predefine your risk, letting the market tell us when it's potentially reversing or moving in the other direction. So we want to trade long with bullish candles and trade short with bearish candles. So we'll go to the GPY, and again we previous week's high and low. We draw these on the chart, and again we see the market on Wednesday take out the high of the previous week. Now this is ideally what we call our hope lope setup. This is the highest close in the last 20 bars, and we have a narrow range candle that we can trade the break of the low of the high period. So this is the highest high and the highest close in the last 20 candles, and we have an opportunity to short this market at the top of a range. We can predefine our risk, so we can set a maximum amount, 1 bar stop, and we're looking potentially maybe at a 3-to-1 risk reward on this trade, at least 2.5. So traders, this is just one simple way to look at the markets. Just again, previous weeks highs and lows, not necessarily support and resistance, but previous weeks highs and lows. Very important. If you understand market profile and you're able to apply that to end-of-day trading, this can be a very powerful strategy, and the same thing applies to using the monthly ATR, which we'll talk about in another video. So look at the previous week's highs and lows. These are great opportunities. Look for the market to give you an indication of turning or reversing, so you want to be long with bullish candles, short with bearish candles. Obviously there's other trade setups using short squeezes and hope lope setups, inside bars, pin bars, all those types of setups, but today we're focusing specifically on highs and lows of the previous week. So if you haven't done so, go to my homepage to get my 7-step daily routine for high performance traders. This is all about ritualizing your daily routines, developing the habits and strategies to, accelerate your learning, be goal setting, working on your vision, pushing the boundaries every single week to get better and better at your trading. And traders, the opportunities are there every single week for us to, extract profits from the markets. So keep it simple. There's different strategies you can apply, but the most important thing is to keep getting better, trade smart, preserve your capital, protect it, manage the downside, and focus on asymmetrical risk-reward opportunities. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.